The Indian stock market just got rocked, and billions of dollars seem to vanish in a single day. Now, the main culprit might surprise you. It's a technology that's supposed to be building our future, artificial intelligence. So we're going to break down exactly what happened, why it's got so many investors spooked, and what this all means for the road ahead. So let's just start with this number, because it's a big one. 7,395 crore rupees. That's how much money foreign institutional investors, we're talking the big global players here, pulled out of Indian stocks on Friday, alone. When you see an exit like that, you know there are some serious jitters in the market. This is really the key to the whole story. All right, so what exactly went down? Let's zoom in on last Friday. Now, this wasn't just some minor dip. Nope, this was a sharp, decisive sell-off that really sent a shockwave through the entire market. India's two main indices, the Nifty 50 and the Sensex, they both took a serious tumble, well over 1% each. Now, look, those numbers might seem small, but for entire indices, believe me, that represents a huge loss in value and a really sudden reversal in investor confidence. So the big question is, what was the trigger? And here it is. This was the epicenter of the earthquake. An 8% plunge in the IT index. That's not a dip, that's falling off a cliff. An entire sector, home to some of India's absolute biggest companies, just got hammered. This was the single biggest factor dragging everything else down with it. To really understand Friday, you have to understand what's spooking the world of tech right now. And yeah, that brings us right to the heart of it, the AI shockwave. It turns out the very same technology that promises to completely revolutionize our world is also causing a full-blown panic among investors. It's a fascinating paradox, really. So here's the paradox in a nutshell, right? On one side, you have India positioning itself as this global AI leader, even hosting a massive summit. That's the long-term dream. But on the other side, you've got the short-term nightmare for investors, this growing fear of an automation shock. They're worried that AI could basically make the old business models of IT giants like TCS and Infosys obsolete, almost overnight. And that threatens millions of jobs and, of course, billions in revenue. But AI wasn't the only thing going on here. To get the full picture, we really need to follow the money. There was this massive institutional tug of war happening behind the scenes, and it was just adding fuel to the fire. So, who was selling and who was buying? Well, think of it like this. On one side of the rope, you have the foreign institutions dumping almost 7,400 crore worth of stock. But on the other side, you've got India's own domestic institutions. We're talking mutual funds, insurance companies, and they were trying to hold the line, buying up over 5,500 crore. They acted as a buffer, for sure, but it just wasn't enough to stop the bleeding. More money left the market than came in. And this wasn't all just an Indian story. The global picture was also looking pretty gloomy. Weakness in the U.S. tech market was already making investors nervous. And on top of that, you had this strong American employment data. Now, that sounds like good news, and for the economy it is, but for the markets, it means interest rate cuts are probably not happening anytime soon. That makes borrowing money more expensive and just kind of dampens the mood for taking risks all around the world. Okay, so that's the why of what happened. Now for the what's next. Because we're entering a technical battleground where the market's next big move could really be decided by just a few critical numbers. Let's be blunt about this. The momentum has shifted. The market has broken through what traders call support levels. You can think of them like a safety net for the price. Well, those nets have broken. So the short-term trend is now officially negative. The bears, the pessimists, are in control, at least for now. And these are the new lines in the sand. So that support level, that's the floor. It's the price where buyers are expected to finally step in and stop the fall. For the Nifty, that's right around 25,400. Then resistance is the ceiling, the price where sellers usually take over and put a stop to any rally. That's up at 25,840. These are the crucial zones where the battle between buyers and sellers is going to be fought next. But, and this is a big but, there is one major exception to all this gloom. The banks. The bank's Nifty index has been surprisingly resilient through all of this. While pretty much the rest of the market is wobbling, the banking sector is holding its ground, staying in a positive trend as long as it can stay above that 60,015 mark. It's a really crucial pocket of strength to keep an eye on. And that brings us to our final section here. Because despite all the negative headlines, the market is not one single thing. While some sectors are under some really heavy pressure, others are actually showing incredible strength. So first, let's look at where the pain is really concentrated. I mean, beyond the obvious tech sector, consumer goods companies, the ones that sell us our everyday household items, they're also getting hit hard. When a giant like Hindustan Unilever drops over 4% in a single day, that's a big red flag for that entire part of the economy. But now, let's talk about the bright spots. In pretty stark contrast, you have sectors like automobiles, capital goods, and pharma that are actually outperforming. You've got companies like Eicher Motors and Apollo Hospitals doing quite well, and they're boosted by strong recent earnings and a lot of optimism about their export businesses. This is kind of where the smart money is finding opportunity right now. So we end with the big question that's just looming over everything. Is this AI-driven panic just a temporary shock, a blip that's going to fade away? Or are we witnessing the very beginning of a deep, fundamental shift in how the market values its largest and most important sector? The answer to that is really going to define the next chapter for the Indian markets.